Should you or should you not have a loan contingency with your purchase offer? It may or may not make sense for you to have a loan contingency when it comes to a competitive offer situation. On one end of the spectrum, a loan contingency will protect you in case you don't qualify for a loan. However, on the other side of the spectrum, having a loan contingency could discourage a seller from accepting your offer, especially in a multiple offer scenario, and other people might not have that contingency. Because if we put ourselves in the shoes of a seller, it is less risky, with less contingencies in place if an offer is accepted, and that's why a seller would prioritize an offer with low to no issues or concerns. Now let's talk about why most people consider having a loan contingency to begin with. If it is your first offer you're writing, you may feel safer to have a loan contingency. And the best way to verify if one is necessary is to talk to your lender, because your lender is going to have a really good idea of your loan file and your qualifications. This is why in previous videos, we've talked about pre-qualification letters, pre-approval letters, and underwritten approvals, and what's the difference. A pre-qualification letter has only verified your information financially verbally. It's not very strong, and it tends to lean towards needing a loan contingency on your offer because your documentation and your employment and your tax records and your pay stubs have not been verified by your lender. Now, having a pre-approval is taking the next step and will be helpful for your cause. However, there's still an underwriter that your lender could package your documentation to send it to. If you have an underwritten approval, which means an underwriter has already looked at your financial background and documentation, and you're well qualified and you have seasoned funds, then your timelines are as fast as they could be when you write that offer. With that said, it's still your choice whether you have a loan contingency or not. And my best advice for you is if you like or love the home enough that you're looking at and you know it's going to be competitive and you have an underwritten approval, it may be a consideration for you to potentially not have a loan contingency if you really want to get your offer accepted in, once again, a competitive market. Now, what are the repercussions of having a loan contingency? For whatever reason, if there's something that changes about your job or a part of your funds are not seasoned, you may want to make sure you have some sort of safety net in place, or something about the property that doesn't allow you to qualify for financing. Buyers to be able to get financing then, that could be a potential issue that causes you to question if it makes sense or not to waive the contingency. Another is if there's a shortfall on the appraisal, it doesn't mean that the bank won't give you the loan for the property. It just means that they're willing to give you a loan based on the loan to value ratio of what they appraised it for. So that's why down payment amount matters so much when it comes to writing offers in an opportunity to get one accepted by the seller, because the more down payment you show, that's going to cover any shortfall on appraisal or any sort of issues when it comes to qualifying for your loan. That's the pros and cons of having a loan contingency, and a purpose on both sides to be considered, so you have a better understanding of whether you need one or not. Here's a checklist of questions that will help you narrow down if you need a loan contingency or not. First, what type of approval do you have? Secondly, have you reviewed disclosures with your agent to determine habitability and financeability? Third, how much do you like or love this home? Fourth, how competitive will the offer process be? Fifth, have you seasoned your funds already? And six, what is the lender's feedback on your file? We hope you found this video helpful. If you have questions for us, please reach out to us. We're here to help you.